I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors. Thank you, and over to you, Mr. Agarwal.
Thanks, Margaret. Hi, good morning, everyone, and a very warm welcome to IPCA Labs Q2FY21 earnings call hosted by DAM Capital. On the call today, we have Mr. A.K. Jain, Joint Managing Director, IPCA Labs, and Mr. Harish Kamath, Corporate Counsel. I will hand over the call to Mr. Jain to make some opening comments, and we will open the floor for questions thereafter. Please go ahead, sir.
Thanks, Nitin. Good morning to all participants, and thanks for taking out time and joining us for Q2 IPCA Labs conference call, earning calls today. Today's con call and discussions and answer given may include some forward-looking statements based on our current business expectations that must be viewed in conjunction with risks that our business faces. Our actual financial performance may differ from what is projected or perceived. You may use your own judgment on the information given during the con call. I would like to inform you that company's business and financial performance in Q2 FY21 has been strong in spite of testing time on account of global COVID pandemic. We have used our integrated business capabilities in furthering our global drug formulations and API business. The business and margin growth in Q2 FY21 is largely driven by domestic formulation business had very good revival in Q2. Overall business growth was 6%, excluding business from anti-malarials, where we had a significant debacle in this particular quarter. The division had a significant decline. The anti-malarial business division had a significant decline in business in FY Q2. On base of 95 crore, the base is now reduced to almost around 59 crore. So a decline of almost around 36 crore was observed in Q2 in anti-malarial business. The pain and cardiac business that constitute more than 70% of the domestic business of the company. In Q2, the pain segment had almost around 10% growth, and from the base of last year's base of 251 crore, the business went to almost around 276 crore in Q2 of current financial year. And in cardiovascular also we had 6% growth. From a base, last year's base of 91 crore, business became almost around 97 crore. And all other businesses also are reviving, except the cough and cold, where we are still seeing some kind of decline. Antibacterials, we are seeing some kind of decline, but all other businesses are, their decline was much higher in the newer segments like derma or your ophthalmology in first quarter of the current financial year. Second quarter, there has been a significant recovery. There are only marginal declines are there in these business in second quarter. And we see that all these business will turn to positive growth in the coming quarters. So domestic had a very good revival in the second quarter, except your anti-malarial divisions, where the business decline was on account of the seasonality and all. And also that segment as a PDI as a segment, where the business decline is also continuing. Higher currency realizations on exports, almost around 5%, has also helped the company in overall growth. Overall reduced traveling cost and marketing cost has also helped in overall having a higher business margins in the continuing for the first quarter and second quarter. Higher business growth in API are continuing. And institutional business in Q2, we had a very good performance, also similar to that we had in Q1. These upsides were somewhat offset by we have not made any provision for the MEIS benefit in Q2. Normally, in a quarter, that benefit would have been almost around 12 to 13 crore. But in view of uncertainties, and no budget provision still, in view of that, no provision has been made. So almost around 12 to 13 crore worth of that earnings are not available in this quarter. Export freight continue to remain very high in current financial year. we almost paid around 61% higher freight in current year, and that trend has continued. Of course, the higher percentages, it will come down to around 30%, but overall the freight continue to be high. Having given the basic presentation, all numbers are there in front of you. So I would request now for question answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We would also request participants to limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Sir, congratulations on a good set of numbers. Just a couple of questions. You did mention about domestic business getting into the growth path now. So can we see for the next 2 quarters growth compared to the last year? And any focus areas in terms of therapy which now we are focusing compared to say 6 months back? Secondly, sir, do we have any one-offs, like in Q1 we had some one-offs or additional business coming from HCQs and government business we did on the domestic side? So in this quarter, anything with regards to some kind of business which probably could not be a repeat business? And lastly, sir, on margins front, our gross margins continue to be around 67.5%, but we have seen a sharp jump in operating margins for this quarter, probably due to the other expenses operating leverage taken in. So do we see now the shift going in the next 2 quarters and the year ahead? What kind of sustainable operating margins are we talking about, or where do we see the operating margins for next 6 months or next 12 to 15 months?
Thanks, Rahul. I think overall domestic business revival is very good, except the anti-malarial business and all antibacterial and to some extent cough and cold business. These are the businesses which are still having some kind of issues, but all other businesses are reviving very fast. The pain segment is more than 50% of our business. In Q2 itself, we had more than 10% growth. Cardiovascular continued to remain strong. And our other businesses, which are upcoming businesses like Derma, Europe, your CNS kind of business, all are now in the growth. We have seen good growth in the month of October in double digits, and we expect that business in the second half would be significantly better than what we had in the first half of the current financial year. And it's possible to achieve almost around 10% plus kind of growth in the overall in the second half of the current financial year, looking at the current the business expectations and also the performance which we have seen in the month of October and all. As far as the businesses are concerned, I think overall there is no one of this kind of business in the current financial year, in the second quarter of the current financial year. So it's all a normal business what we had. So there are no one-off as such in the top line, except there was almost around earning of around 13 crore, 12.5 to 13 crore, which was received on account of some contracts relating to a MNC company on supplies, which subsequently got cancelled because of the change in the circumstances. And since we had incurred a higher cost around that time, so there was a compensation of almost around 12.5 crore, which we have received in the second quarter of the current financial year, and that has been accounted as a part of the other operating cost, other operating income. So that's the only exceptional I would say that is the one time. Other than that, we don't have any kind of one-off in neither on expense side or nor on the income side. As far as gross margins are concerned, we had a business growth of almost around 7% in this quarter, overall numbers, standalone numbers. As against that, our material cost has gone down by 1%. Your trend continue to be, let's say, your overall intermediate trend is now a little softer is there. And the overall your solvents and other things are at much lower prices now. And this trend is likely to continue because petroleum prices are continue to remain at a lower end of in the cycle. And therefore, we see that more or less in spite of API business growing higher where the material cost is higher, the gross margin levels has gone up. And also one of the another reason is that in this particular quarter, I would say that anti-malarials has declined where we don't make that kind of gross margin. It's basically some of the products are also at a very, very low kind of margins are there. And that business has declined. But other businesses has grown where the margins are better. And therefore, overall gross margin levels are also good. As far as the generic businesses are concerned, of course, we had some kind of decline in UK, but our European business has done much, much better. I think whatever decline we had almost around 40 crore from UK, that has been compensated by the increase, significant increase in the business from the other European countries. And there also the business profile, overall margin profile has improved because our margins in compared to UK is much higher in the other businesses. So even generic businesses wise, we did better, and trend will continue to be good as far as these issues are concerned. So, as far as operating cost is concerned, operating cost will continue to remain in control. Of course, with the revival of domestic, there will be some kind of additional cost will be there, but the travel and other costs will continue to remain significantly down. And also your other marketing costs, there will be some increase in there, but will be there in the second half of the year, but will remain in not a very, very high level. So overall, the margins levels will remain good, and whatever margins we have reported, they are sustainable kind of margins what we have reported in the second quarter.
Thank you so much for this detailed reply, sir. Wish you all the best. Take care. Thanks.
Thank you. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Firstly, sir, on the domestic business, if you can clarify, I missed in between, what had led to what has been recovered and what is still degrowing and when it will recover, if you can give the split again for that. And secondly, sir, in terms of the API run rate, do we expect this kind of API run rate and this kind of pricing to continue for at least next 2 quarters? So these are 2 questions from my side, sir.
Thanks, Amar. As far as the businesses are concerned, I would say that the pain segment is the major business segment for us, which includes rheumatoid arthritis and osteoarthritis. Both the segment put together has grown by almost around 10% in this quarter. I have said that from base of last year's base of 251 crore, that business has become almost around 276 crore. And you will notice that the pain is now almost more than 50% of our overall business in second quarter.
Correct.
Cardiovascular had almost around 6% growth from base of 91 crore. The business was around 97 crore. And there also recovery is very, very strong. The business recovery has been, let's say, the first quarter our neuropsychiatry business was declining. That has also come in the positive growth. Ophthalmology business was declining. That has come in positive growth. And the decline in derma business and euro business was almost around more than 20-25%. That decline has now become almost around 5-6%. So overall, and we see that this business will have a good growth in the third quarter in current year. The only businesses which are continue to show decline is number one, the older product portfolio, which we have almost around 80-90 crore kind of old product portfolio, where we are continuously seeing around 8-10% kind of decline. Antibacterials are continuously declining, and that decline percentage is around 12% or so. And your cough and cold is also having decline, which is around 10-12% decline is there in cough and cold also. And anti-malarial. Anti-malarial, the base has significantly eroded. And normally second quarter have almost around more than 55 to 60% kind of anti-malarial business. This year there was no incidence of malaria practically, and practically that business has declined by almost around more than 50-55%. So completely base is eroded as far as anti-malarial is concerned. And overall anti-malarial now in the business is becoming insignificant, because overall when year end when we'll work out the final pie of the business, I think anti-malarial will become almost around 4% of the business. So now that risk is completely gone. Normal second quarter, that's the highest base, and that base has already declined. So in future, even if anti-malarial something happens, it's hardly going to be insignificant, because it's now the overall base of anti-malarials are very, very low. And therefore we are saying that yes, there is a good revival. Of course, that is subject to that if there is a second wave of infections and some lockdown, which are unlikely. If it happens, then business may again have some kind of issue. But otherwise, we are saying that yes, the business growth is likely to be good in domestic in the second half of the current financial year.
Okay.
As far as the API is concerned, right now we are not there in the US market. So there is a zero business in that kind of segment, and there is where the most of the stocking and higher pricings and all that things has happened. So as far as we are concerned, it's a business as usual, because we don't have any supply to US currently.
Okay. Correct.
So the business growth will continue. Of course, as we have said earlier that we have capacity constraint continuously. We are working to do the debottlenecking. A lot of those kind of initiatives are currently also going on. So we are creating incremental capacities, and with that the business growth is continuing. We have already started work on our Devas project. Civil work has already started. All clearances are received. And so hopefully I think in maybe around 14-15 months time, plant should be ready, and thereafter validations and all may take around 17-18 months overall to be ready to do the commercial business from there. So that's the new thing. Otherwise, API run rate by and large would continue.
Okay, so API run rate. Sir, if I may ask one more, sir, antibacterial and cough and cold would be how much contribution to the domestic business?
Antibacterial was almost around 5%. Cough and cold is around 4% of the business.
Okay, thank you, sir. Thank you.
Thank you. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question is again on the API side. So, sir, is it possible for you to provide the current utilization at our plant, and how confident would we be to, for this run rate to continue for next year as well, based on the current capacity?
As I said that some kind of 10-15% capacities we are continuously creating by debottlenecking. So that will continue. The capacity utilizations are currently very high. And absolute number giving is very difficult, because some product may have 8-10 steps, some product may have just 2-3 steps. So volume and all differ. The pricing and everything are different depending on what kind of starting material prices and all are there. But I would say that plant utilizations are almost around 90% currently. And some kind of incremental capacity creations is in pipeline, which is happening now at our existing plant at Ratlam and others. So that will continue, I think. And overall, we are projecting that the business growth in API in the second half will remain around 18 to 20% kind of business.
Sure, sir. And so my next question would be on any update on from the US FDA side with regards to a reinspection or Any submissions or any clarification you would have seek from us?
We are continuously engaging with FDA, and till the time anything reaches to the finality, I would not like to comment. So I would say that status quo is continuing.
Awesome. Thank you for answering my questions.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thank you for taking my question, sir. So, sir, basically, first question is on the institutional business front. So, is the Global Fund has raised their budget for the block of the current 3 years almost by 25% more compared to the earlier period in terms of procuring the product. The already means whatever product that they have been procuring, whether it's anti-malaria or whatever all those segments. So there they have raised. So have you started seeing any benefits that flowing into your supplies, sir?
I think overall we have given projections of around 200 to 225 crore for the current financial year. And when you look at the number in the first 2 quarters, we already done more than 170 crore.
Exactly, that is why I'm asking.
And the run rates are very strong. So
Okay.
that trend will continue. So hopefully business growth is on institutional front is going to be very good.
And generally, sir, for the general export also, like this quarter, a marginal kind of sequential decline, of course, having a kind of a robust quarter last in the first quarter. So this is just a kind of sequential kind of issue that we are seeing, and the YY 18% kind of growth that we are seeing. This is the normalized YY growth and should continue, or this is a quarter which is seeing some kind of moderation and possibly we can see pick up subsequently, or your sense on the export front, sir?
So, sir, I have guided for API business growth of around 18 to 20% in the second half of the current year. As far as the domestic business, I have talked about that the growth could be around 10% kind of.
No, general formulation export I'm talking about, sir.
Formulation export, there will be some kind of better business will continue because institutional business is continuously doing very well. Generic or other than UK business is going good, and UK will recover. In the second half, we will see a significant business increase in UK. So even generic business growth is going to be good.
Okay. UK was seeing some kind of moderation or anything, sir, or any challenge that during this quarter?
Yeah, we had some kind of issues with distributors because there was some overdue outstandings were there, so account was not regular, so we have reduced the supplies. Now the account has become perfectly in order, and we have started accepting the orders and all. So
Okay.
UK business in last financial year, Q2 was almost around 54 crore. That has come down to around 12 crore in this quarter. So almost around more than 40 crore reduction is there in that. But that is almost around similar kind of from other than EU business, which was 48 crore last year in second quarter. That has become almost around 83 crore. So significant increase of almost around 70% has happened in the other EU business. So more or less now, even in third quarter, UK would do well. Europe will continue to do well. Australia, New Zealand, Canada, these businesses are continuously doing very well. So we will see a good growth in generic business also.
Backward integration aspects, whether it is through the PLI scheme, any update on that, or the kind of what is the level of now if you are providing the quarterly data point, let's say what percentage of your formulation is currently integrated, so and what is the level incrementally, what is the kind of thought process that you are now having for your case and dedicated side, that is the novel Exlocane that you had acquired. So something on these side, so which will ultimately achieve a kind of better integration for your overall business. So your thought on that, sir?
As far as on backward integrations on intermediate side is concerned, we have put up one project at our Aurangabad site, and that's a continuous process kind of plant. The deliveries of machines and all which were expected in the month of April or May, that got significantly delayed because of COVID. Large number of people from suppliers got the COVID infections, and whole the schedule got upset. I think the one part of the system is already received and installed and put to use. The second part of the system is now under installation, so probably that will become operational. So full automations will happen by December now, which we were earlier expecting that at first quarter end that could have been happening. So that's one intermediate for one of our sartan products that will be produced through this kind of integration, backward integration, a continuous operating plant, not a batch processing kind of plant. One of its kind. That technology is new. All manufacturers are producing that intermediate through the batch process kind of thing, and we have put up continuous manufacturing plant. And if this experiment succeeds and everything goes well, we will further increase the capacities of in-house production. So dependence on China on intermediate will then significantly come down. So that's the one update on that thing. As far as noble explocane is concerned, yes, because of again pandemic and the travel restrictions and other things, we could not do much on that side. But now we are working on the projects, and internal team is working. Hopefully, maybe in next 3-4 months, we will be applying for environmental clearance, and all the environmental impact studies and others will be initiated. So anything happening on ground after that, it may take around 6-8 months time. So no capex would happen in current financial year. Next financial year, yes, we have lined up almost around 3-4 intermediates to be integrated at particular sites after the receipt of your environmental clearance. So that will take still some more time. As far as PIL scheme is concerned, we are ready with the submissions for the two products on synthetic your organic chemistry product, not the fermentation product. So we are not participating as far as fermentations are concerned. But your other API side, the chemistry side, we are putting up the application for 2 products. So that's the update here.
Thank you. I would request Mr. Patra to rejoin the queue for follow-up questions. The next question is from the line of Kunal Dhamesha from MK Global. Please go ahead.
Thank you for taking my question. So, as you alluded that most of the capex would be in FY22, so that would include both Noble Explochem and Devas, or will we be doing some capex for Devas in the FY21 and then some would be spilled over to FY22?
As I already cleared that Devas, we already started construction.
Okay.
So that is going on. So next 6 months, all civil structures would be ready. And installations would start somewhere at the year end or maybe early part of the next financial year. And Noble will take some more time. Yeah. And some more capacities are maybe around 100 crore is happening at Ratlam site on API side, on debottleneckings and others. So that will become operational by March. Yes.
Okay. And then what would be the capex that would be doing for Devas and Noble Explochem?
Devas overall will have almost around 250 crores. Noble, we have yet to work out numbers, so we'll not be able to give you anything. And Devas will be around 250 crores.
Okay. And the second question is on this continuous manufacturing that we've been talking for the last couple of quarters. So how much edge it provides us in terms of the manufacturing cost over, let's say, batch manufacturing, and then do you see that edge could eventually lead to a lot of market share gain in certain products?
As continuous manufacturing concern, your operating efficiencies are better. Your capex is high because it's continuously console control kind of plants. Everything is automated. And your reaction outputs are better. Your reaction coefficients are far better. I will not be able to talk much right now till the time we put up the plants and start seeing the benefit. But yes, the piloting and all indicates a significant reduction in the cost.
Significant would be 15-20% or even higher?
Right now, I will not give numbers. Let the things happen. Yeah.
Okay. Thank you. All the best.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, if you could elaborate what really went wrong in UK. You said there is the business drop from 50 plus crores to 12 crores. And what you have, why you expecting it to recover? Is the issues resolved?
Yeah, Prakash, if you see first half of the current financial year, there is a substantial reduction in the UK business. Last year, first half, we did about 94 crore. Versus that, this year we have done about 33 crore. So there is a 60 crore reduction in the UK generic business. Whereas European business last year, first half was 75 crore. Versus that, this year, first half, we have done 178 crore. So there is a substantial improvement in the EU business, almost 100
understood that. I wanted to know in UK what has gone wrong.
I will tell you. UK now the account of the distributor is in control. It is online actually, so there is no delay and all. So we have started accepting order. You will see a good growth in the UK business in the second half compared to same period last year. So Europe will continue to grow. UK will also grow in the second half compared to same period last year.
So I understand growth will come back. I'm trying to understand the reason of the decline. And
I said because there was a lot of receivable from the distributor. His account was not up to mark. That is why we stopped accepting order. Okay. So now the account has come up to level, whatever we were expecting. Now we have again started receiving order and manufacturing is happening.
Okay.
Yeah. That is the only reason, nothing else.
So now, how will it revive?
No, I said orders are already there. We have started manufacturing, so you will see uptake in the shipment in the third quarter as well as in the fourth quarter.
Okay. And for the years to come, because we have this business built on a good platform now.
Plus, parallelly, we will be starting our own distribution as we explained last quarter, and that work is also happening parallelly.
Yeah. Okay, understood. Fair enough. Secondly, on any commentary on the sartan opportunity in the API, you did mention that growth of 15-20%. But how is the pricing competitiveness, market share in the sartan?
There has been not much variance with pricing compared to first quarter and second quarter, and we continue to have good order position in losartan, where we are one of the biggest exporter from the country, and we believe that the thing will continue going forward.
So pricing, market share, both are not an issue?
So far it is not an issue.
Okay, perfect. And lastly, on the capex, you did mention 250 for Devas, but what are the expectations for second half and next year on an overall company basis?
Including our routine maintenance capexes, this year it will be about 200 crore, Prakash. Next year it may increase to around 300-350 crore. Because most of the capex for Devas would happen in the next financial year.
Understood. Fair enough. Great. Thanks and all the best.
Thanks, yeah.
Thank you. The next question is from the line of Mukesh Shah from Motilal Oswal Asset Management. Please go ahead.
Thanks for the opportunity. So just one question from my side. You mentioned that the margins of about 28% that you did in this quarter is sustainable. I just wanted to understand, is that understanding correct for the second half of this year and going forward into next year? Should we build in similar margin structure or should we build a higher margin structure? How should one think about that?
See, more or less, whatever second quarter margin is there, more or less that margin will going to continue in the third and fourth quarter of the current financial year. Based on the presumption that the domestic branded business will improve as we move month after month. That is what we are seeing.
Sure. And sir, we historically used to always look at margin expansion on a YOY basis. So is it safe to assume that next year we can build in on 28 or
no,
28 is where it is sustained?
Mukesh, please understand, in the first quarter, the margin what we had, it is impossible to repeat because of that additional business and all. So let us focus on second, third, fourth quarter, whatever margin we are doing, that will continue. But first quarter margin, if you consider in the overall year, it is very difficult to replicate that kind of a margin.
I understand. So my only question was that if you are at 28% margin, should 22 and FY22 and 23 should be about 28%, closer to that range, right?
Yeah, that is correct, right.
But
So
that
quarter on
would be
quarter, there will be some variation between 25 and 27%. It will fluctuate.
That will still be a very significant jump than what our historical margins was. At 19-20%, you will be at it. Okay. So 28 is sustainable.
See, during 2014, our margins were as good as what we are doing now.
Yeah. Okay.
When our US business was ongoing.
Sure, sir. Perfect. Thank you, sir.
Thank you. The next question is from the line of Abhishek Sharma from Jefferies. Please go ahead.
Yeah, thank you for taking my questions. Just two questions on sartans. First is on the landscape. Do you see any competition on horizon? Any of your competitors doing capex? Any new player, trying to install capacity? So just, what are you seeing on the market? That's the first one. And second is on the intermediate. So you said that, you're basically bringing in one intermediate. I just wanted to check if that is OTBN. How many such intermediates do you plan to bring in, and when that process is done, would you become the lowest cost producer? Thank you.
Abhishek, Mr. Jain has said this intermediate is for sartan business. I won't name the intermediate. But as far as the sartan businesses are concerned, so whatever guidance we have given, whatever internal, whatever guidance our marketing team has given to us, we are progressing as per that guidance. And as you now may be aware, the API business is now highly regulated, so it is not so easy for any consumer to change source from one to another. So they have to go through a lot of processes and all. But as far as we are concerned, whatever projections we have given, whatever our expectation is there, so certain businesses are progressing as per that.
But do you see any, so I'm sure you are doing some landscaping in terms of, your competition, people who have gone out of market, etc. Do you see any of them coming back?
In any case, Abhishek, we were not a big player in valsartan. The people who went out are mostly for valsartan API. There, whatever business I am doing today is plus on whatever I was doing earlier. As far as losartan is concerned, there has been no disturbances. And whatever growth projection we have given to the market, we are moving as per that.
Right, sir. And just on intermediate, without naming the intermediate, would after you've done this entire backward integration exercise, would this make you the lowest cost producer for sartans?
Yeah, Abhishek, I would say something like this. To remain competitive, we need to do all this. I won't say anything further than this. So whatever, if it works, whatever we are projecting and whatever we are doing, if it is successful, that will give us a further competitive advantage with other players when it comes to sartan business.
All right, sir. Thank you.
Yeah. Thanks, Abhishek.
Thank you. The next question is from the line of Naresh Suthar from SBI Life Insurance. Please go ahead.
Yes, sir. First, one clarity on the margin guidance which you just provided. So, second half you are expecting to continue around second quarter level, like 28% margin, and for the next year and after that, you are expecting a range of 25 to 77%. Is that right?
Yeah, that is next year. I said that correct. But if you see historically, the second half margin is lower than the first half margin always. Because second quarter business in the domestic is always highest if you see our quarter-wise domestic business pie. But this year, because of this COVID situation, hardly any malaria business.
Right.
So going forward, our third and fourth quarter will be definitely better than the second quarter domestic business. That is what, based on that, the projection what I gave you.
No, my question is more about the...
it will be in the range of 25 to 27% going forward.
So, sir, we last year, like we had around 20% margins, and because of this pandemic, we had some cost savings and also benefits in gross margin. So this the shift of from 20 to 25 to 27, that 5-6% shift, is it higher because of the cost savings in marketing expense, or is it higher because of the gross margin benefit you are seeing? What is the major benefit?
Because of the gross margin benefit, there is a 150 basis point improvement in the gross margin.
Sir, that is only 150.
Yeah, 100 to 150 basis points, right.
But another 450 is because of other expense, right?
That is correct, right.
So that is mainly because the allied marketing activities which we are doing
field operation cost. But having said this, we also incurred an additional manpower cost, which was COVID allowance. So there we have spent about 20 crore plus. Another thing which is not there in this quarter is about 12 to 13 crore MEIS benefit on the export formulation business, which we used to get every quarter. So this quarter, because of the government, they are moving out of MEIS scheme and there is no budget provision for paying that. So we have not provided for that. Otherwise, this quarter it would have been another 100 basis point improvement in the margin.
Understood. What I'm saying is, sir, this quarter also has a little lesser marketing activities. So as a marketing...
First quarter, there is a additional expenditure when it comes to marketing activities. So it will get normalized over maybe 2 to 3 quarters going forward, unless there is another something COVID peak and other things.
Okay, sir. One more question, if I may. Sir, of the India marketing expenses, how much is expense related to conferences which you do for doctors? If you can, if you are able to share with me, right? Otherwise,
difficult within marketing cost, how much it is and all. So whatever little bit saving is there, partly it is offset by whatever COVID allowances we have given to our workmen in the first quarter.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Managers. Please go ahead.
Yeah, hi. Good afternoon, sir. Thanks for the opportunity. One clarification, this 20 crores on employee cost, is this booked in this quarter, the COVID allowance?
No, it was in the first quarter.
First quarter.
Most of that was in first quarter.
Okay. Secondly, sir, on this continuous processing and batch processing, this question could be quite naive, but just to understand now, if we go in for a continuous kind of a manufacturing, does this create that the facility becomes specific for a product, or the product versatility remains in the production process?
Mostly it is product specific.
So in case
there will be lot of synergy in the operation, manpower, yield, time cycle, everything there will be improvement if it works the way we are expecting it, because whatever R&D we have done, it is working in that R&D scale. This is something, a new concept, so it will take time to understand how it will progress in the commercial scale.
Okay. No, where I'm coming from is because in case in future the pricing or the market dynamics for that product go bad, does this create a risk that because the line would be product specific, does it create a risk of impairment of or any of that sort, or is it like because
no, not necessarily. So there could be some balancing equipment, and that way you can work.
Okay. And lastly, if you can just help me understand on the subsidiaries performance and how are you looking at that going forward?
As far as subsidiaries are concerned, Onyx Scientific is doing well.
Can you share the number?
Onyx has contributed about 10 crore profit to standalone, whereas major in the first half, whereas the major losses that is contributing is by IPCA Lab, US, where it will continue for another maybe 3-4 quarters, because the products are under development, then filing will happen, then registration will come. So that pain we have to continue for another 3-4 quarters.
What is the loss?
Other all subsidiaries, there is some marginal loss in Ramdev Chemical also, because this is a plant which was hardly hit because of this COVID pandemic. So there was manpower shortages. So there were so many other logistic issues. But the plant is now again coming back to normalcy. Whereas all other subsidiaries are mostly registration holding companies other than Bayshore, which is a pharmaceutical distribution company in the US. So there they have done about 76 crore business. Marginal loss is there because of depreciation of their product portfolio goodwill. Otherwise, business to business, there is a small profit they have made.
Okay. Fine, sir. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you and good afternoon, everyone.
Hi, Sameer. Good afternoon. Yeah.
Yes. Sir, you said there was no one-off HCQS, etc. in 2Q. But just for my information, I mean, did you sell any HCQS at all? And if yes, how much was that?
No, whatever regular HCQS business we are having, formulation in India, in ROW market, API sale in India and the rest of the world, except US, that is continuing, Sameer. There is no issue.
Okay, got it. And can you quantify that if that's possible?
No, whatever regular business, there is nothing COVID-related HCQS business in this particular quarter. They are all for rheumatology, whatever use is there in the market.
Okay, fair enough. The second question is, I know many people have asked on US FDA and they are not coming, but sir, through informal channels, is there anything that you are hearing? I mean, when would inspectors, begin inspection? I mean, are they waiting for vaccination? Or what really is...
No idea, Sameer. As far as we are concerned, our facilities are concerned, it is status quo. So unless all these things will improve, I don't think any inspection would happen so soon.
Okay. So fair enough. I'm just wondering, given that now so many plants await there and there's so much of backlog, so even when they do begin, how do they choose where to go? And then can it be, even after they begin, can it be a very prolonged tunnel before they come, to you, for example?
No idea, Sameer. Really no idea. But our guidance ex-US, whatever we have been guiding market, that will continue. As and when US will come, as and when, it will be plus on to whatever we are talking.
Fair enough, sir. And so last question is on the India business. Any take, I mean, are the doctor doctor clinics are all, more or less operational, and the patient footfall, per clinic in that sense, is it all normalized, or do you think we are still falling?
Lot of improvement is there. So October was better than September, largely better. Whereas there are few areas like nursing homes, surgeries, where there is still a lot of issues. Pediatric is another therapy where there is parents are not taking their children to doctor and all. Those things are continuing. Otherwise, we are seeing good growth. Doctor practicing as well as patient footfall, except hospital-related business.
Okay. Got it, sir. Thank you.
Thank you. The next question is from the line of Sapna Jhawar from Dolat Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So, you also acquired Resonance Specialty some time back. How is that contributing to the business now, and what capabilities does it bring to the business? If you could just explain that. Thank you.
Sapna, we have not bought anything Resonance. IPCA is not concerned with Resonance acquisition, Sapna.
All right. Sorry, my bad. Thanks.
Yeah.
Thank you. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Hi, sir. Thanks a lot for the opportunity again. Sir, one clarification. Like if I see the API export business, the run rate was around 310 and 323 crores kind of run rate. And when we are guiding for 18% kind of a growth in second half. So are we talking that the run rate of this API will come down? Because if I do the math, that it will be around 277 crores and 250 crores for the...
Yes. What guidance we are giving, 17-18% growth is vis-a-vis last year second half and this year second half. See, if you consider the run rate, first quarter, as we already said, was very exceptional. That kind of API business we cannot even dream of doing.
Correct.
Yeah. But your second quarter was also high, na, at 323. So it means capacities perspectives, we have capacity, and further debottlenecking can actually increase capacity further by about 10%. Then, do you see, in FY22, going by your full capacity and then debottlenecking, it can add back to the growth?
No, but new capacities will take further time. Na? FY22 plant will be theoretically ready. Then validation, scale up, registration, approvals, it takes lot of time. So till all these activities are completed, we have to depend on Ratlam only. Whatever little bit capex we are doing and debottlenecking we are doing.
Sorry, no, I'm talking.
As Mr. Jain said, API there are so many possibilities. Na? Number of cycles, prices are also different from one product to another. There is $20 product also, there is $200 product also. All those things come into play. And you have a flexibility.
Understood. Basically, you at your full capacity, I'm talking about the current capacity, not the new capacity, including debottlenecking. Do you think, the plant can do about roughly, 1,000 crores kind of a 1,200 crores kind of a revenue? That's what basically, you are suggesting.
What we are guiding is going forward, the API business in this second half, there will be an improvement of 15-18%, and thereafter our guidance is normal 12 to 13% growth.
Understood. Sir, my second question is in terms of the EBITDA margins. If I look at last year fourth quarter as well as year before fourth quarter, typically in your fourth quarter margins are lower compared to third quarter and the company average. What is the typical reason for this?
See, it is mainly because of the domestic branded business. So if 100 is my business, in fourth quarter I do about 18, 19 out of that. Whereas the 80 gets transferred to other 3 quarters. This is the main reason.
Okay. So that basically pushed down your margins to some extent in the fourth quarter. But despite that...
Because our portfolio, the January to March period is healthiest. For the people, not to us.
Oh, I see. Understood. So, but despite then, you are suggesting that this year, second half margins you will maintain at second quarter. This is despite the fourth quarter typically is a slightly low margin business. So, what can we...
In spite of that, the second year business itself is low, na? So we will be growing over that.
अच्छा. लेकिन सर last year तो fourth quarter में कोई बड़ा problem नहीं था in terms of the revenue base. Margins were low because it is not that healthy for you, but otherwise revenue was not that bad.
No, I know that. Last year also fourth quarter we have grown 10-12% when it comes to domestic branded business.
Correct.
And this year also we will grow compared to what we have done last year.
Correct. So, margins लेकिन last year fourth quarter were lower, generally speaking, So, I'm saying from that perspective. That
is why I gave a guidance of 25 to 28%. Quarter on quarter it will vary.
Understood. Yeah. Understood. Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Rahul Sharma from Canvas Stock Broking. Please go ahead.
Yeah, morning, sir. I just wanted to get some sense of the performance of various regions in the export market for the first half, generics and branded.
I have already given Rahul EU including UK. So
yes.
Last year first half it was 169 crore versus that it is 211 crore this year. Australia and New Zealand from 60 has become 89 crore. And Canada has become 56 from 30 crore. So these are the major continents when it comes to generic business. And institutional, it is there already in our press release.
So what 56 crores is which region, sir?
Canada. Last year it was 30 crore.
And 169 crores is EU, right?
No. EU is 178 crore and UK is 33 crore.
Okay. What about Russia, sir?
Russia, first half, there is a growth of 11%. 92 was last year. This year it is 102.
Okay. Any other traction in any other generic markets, sir? Branded?
Generic market we covered now, all the territory. It is EU plus Australia, New Zealand, Canada and South Africa. These are the markets.
Okay. What sort of growth you are foreseeing for the current year in your branded and generic formulation business, sir?
See, Rahul, the company as a whole going forward, we are confident we will grow anywhere between 10% to 12% top line growth. So similar number more or less in the domestic branded business. This is comparison to YOY. Whereas generic, we are confident it will grow by about 15-16% generic business, and there will be good growth when it comes to institutional business.
Okay. And branded, sir?
Branded, our guidance is about 10-11% growth for whole of the year. Quarter on quarter, there will be a lot of pluses and minuses depending on shipments and all.
Okay. And the FY22, can we see a spike in institutional business? Is there a possibility?
Rahul, our institutional business is only anti-malarial. So all depends on season and so many other things. But now we have a range of product. The other two registrations what we got, AL dispersible and injectable, also we see a lot of traction and orders coming in. But you just can't see a very big growth and miracle in that kind of a business.
So any outlay on R&D, is it increasing or any thoughts on that?
No, as we said in our earlier con calls, our more focus is now ex-US development cycle. Europe and all other generic market, institutional business and other things, branded ROW market business. So R&D for time being will be in the range of around 3 to 4%. But when we are back into US, those expenses will improve thereafter.
Okay, sir. Thank you. I'll join back.
Thank you. We will take one last question, which is from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead. Charulata Gaidhani, your line is in the talk mode. Yes, please go ahead.
Yeah. Sir, can you please repeat the outlook for UK and Russia and the numbers also?
Charulata, we said the branded business ROW market, whole of the year it will grow around 10-11%. That is what is the guidance. And in the branded ROW business, quarter on quarter, there will be always variance because of the shipment and other reasons. So this is the guidance. So quarter-wise, it's very difficult to see this quarter we have done so much, next quarter we will do so much. Year guidance we can give when it comes to promotional branded business of ROW market. Generic business, yes, we will continue to grow quarter on quarter. That is what the guidance we have given.
Okay. And UK will see higher growth?
Because in the first half of the current year, there was hardly any business from UK. Last year, it was a 94 crore first half business UK. This year, it is only 33 crore. So
okay.
Going forward, there will be good growth compared to these two quarters as we progress further.
Okay. Yeah. Fine. Do you see more growth coming from formulations or APIs?
The API, our guidance is there about 18%. Domestic formulation, we should see a growth of anywhere between 10 to 12%. ROW, I said around 10%. And generic, there will be about 15% growth. So overall, formulation business growth will be around 12-13%. And API growth will be about 18%. This is YOY growth, third and
Yes.
fourth quarter.
Yeah. Thank you, sir. All the best.
Thank you.
Thank you, ladies and gentlemen. That was the last question for today. I now hand the conference over to the management for closing comments.
Thank you, everybody. We are continuously committed working very hard to and improving our systems on regular basis so that we are back in US business. The management commitment to that is 100%. It's only, and hopefully we should be back as and when the inspections and other things happen. Thank you so much.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.